Tēnā koutou katoa, ko Jamie taku ingoa. Welcome, my name is Jamie from Payments NZ. Welcome everyone to stream number 1, Future-Proofing Payments. In this stream, we're going to delve into perspectives on global payments modernisation approaches. That's going to be moderated by Chad Haymark. That'll be a little later. We'll have a second panel which is focused on global retail payment trends, and that's sponsored by our good friends at ICBC. But first and foremost, I'd like to introduce our first session, Navigating Policy, Standards and Innovation. A session where we explore the impact of global standards combined with a united effort across the ecosystem to transform the international payment experience. ISO 20022 is a term and project I'm sure nearly everyone in this room has heard of, but in terms of delivering a step change to international payments, it takes more than just the new messaging standard to do this. So what else is happening? What else in the global payments community are we focused on to deliver and create a better payment experience? And if you are a believer in what gets measured, gets done, then this session is for you. To take us through a global initiative that will improve the international payment experience, I'd like to introduce Julie Boland from Swift. Julie has 25 plus years in banking and finance industry, having worked as a banking professional across risk, regulatory and financial crime programs. I can say Julie is an absolute expert across domestic, international, transaction and wholesale banking, and I can assure you you'll struggle to find someone more passionate about delivering the best customer experience for international payments. Julie's going to take us through a presentation and then we'll have a Q&A session to follow. Thank you, Julie.
Thank you, and it's a great pleasure to be here, and thank you very much for the kind words, Jamie. Let's kick off with some slides. What I wanted to share with you today was a little bit about the G20. So where I'm going to start is, I should say the G20 targets, but where I'm going to start is explaining what that is and also share some insights around reducing payment friction. So let's start at the very beginning. In 2020, the G20 leaders endorsed a roadmap for enhancing cross-border payments, which consisted, as you can see in the circle, of 5 focus areas and 19 building blocks. These building blocks were defined by the CPMI, so that is, I'll try and explain acronyms as I go, the Committee of Payment and Market Infrastructures, which is comprised of 27 central bank representatives. And they sit under, as a committee, the Bank for International Settlements. They developed this specific proposal in 2020, which outlined best practices, updated guidance, and really they were looking to deliver and explore improvements in existing and potential new arrangements for cross-border payments. Before I go into the slides, I want to share the why. I think this is where it's really important. Cross-border payments are often perceived to face challenges of high costs, low speed, limited access and insufficient transparency. And I guess, when we say perceived, it's probably actually the reality. If any of you are users of cross-border payments in the room, depending on the channel that you use, the payment service provider that you use, you have probably experienced some of these challenges and constraints and probably have a higher expectation from your cross-border payment service, something similar to your domestic service. And this is really what the G20 were trying to kick off in 2020 with these 19 building blocks. Obviously, cross-border payments affect end users in different ways. Individuals and small companies really face challenges around fees and speed and perhaps financial inclusion. And of course, the cost is one of those biggest customer expectations that we're looking to meet. But then there's also complexity around what data do I fill in? what do I need to add to the payment to send something to India or to China? There are purpose codes, there's different structures for cross-border payments that perhaps we're not aware of. So there are some of the other challenges around making it simple, but also making it transparent. So tracking end to end, where is my payment? When did the end customer receive the funds? So these are some of the things that the 19 building blocks were trying to address. In October 2022, there was a reprioritisation of the 19 building blocks. There are some building blocks still there. You can see, might not be too visible on the screen, but there's definitely a consolidation and reprioritisation happening in 2022. And this was really trying to bring together some practical actions that the industry could take to achieve some defined targets, and I'll share those defined targets in a minute. In these, these three priority areas, you can see payment system interoperability and extension. So that's really looking at how we might be able to extend RTGS or high value clearing operating hours, interlinking of instant payment systems around different regions and perhaps the globe in a future world. And also thinking about new payment infrastructures and arrangements, like how do we join existing infrastructures with new CBDC rails, as an example. A lot of work really needs to also go into legal and regulatory and supervisory frameworks. How do we get different countries in different regions of, in parts of the world to agree on regulatory frameworks and controls and risk controls and practices? It's actually quite a complex space to work in. And then, of course, really trying to make sure that we all work from the same messaging standard, which is where ISO 20022 will play a big part in making all different payment systems around the globe instant, real-time, potentially low-value, interoperable, and make it a better, faster, more seamless experience for our end customers. So these are the targets, and really these are quantitative targets, and they're to be achieved by the end of 2027, which is not that far away, to be honest with you. And they are quite challenging targets, to be fair. And the public authorities and the private sector really need to work together to address these challenges. It is not possible for commercial banks or central banks or other regulators to do it on their own. Absolutely, it's critical that we come together and really drive towards these outcomes. And so the targets are, and what you see here on the screen are targets for wholesale customers or payments, retail and remittances. Actually, they're the same. There's a slight difference between retail and remittances, but not too much. There's a slight difference between the cost, but the speed is relevant across all customer segments, and transparency is the same across all customer segments. Speed is probably one of the hardest ones to achieve, and it's 75% of payments to be available in the end customer account within 1 hour, and the rest within 1 business day. And right now, that's actually not achievable in any country, except the US is quite close to that. I'm going to show you some data now. So I want to just talk about the differences in the way that we measure speed. From a SWIFT perspective, we have what's called GPI, which is Global Payment Innovation, and it's a service that tracks payments end to end. And we track payments with a unique reference number, and we timestamp the payment as it moves through the SWIFT infrastructure from bank to bank. It doesn't matter if the bank is closed or not, or not operating, or the SWIFT queue is closed or down for maintenance. We timestamp the payment that the message moves on the SWIFT network, and this is how we define end-to-end speed. and end-to-end processing times. And we share our speed data with the CPMI and the FSB for the wholesale segment. But this data you're looking at is actually all SWIFT payments on the SWIFT network for the first half of 2024 that have been credited to an end customer account. So if you look at the top green bar, what that measures is in-flight speed. And what you can see actually all around the different regions that I'm sharing here on the screen is most of the regions are meeting the target of moving payments within 1 hour. In-flight speed is actually measuring the time the sending bank passes to the intermediary bank, who then passes to the receiving bank. This is a bank-to-bank flow. What this tells us is SWIFT is pretty fast. Intermediary banks are pretty fast. No one is really holding on to their transaction for a long time. It's not taking hours, it's not taking days. 90% of payments thereabouts across all regions are actually meeting bank-to-bank or in-flight processing time within 1 hour. Where the challenge is the yellow bar. And what you can see here is end-to-end processing speed. And this is the customer experience processing speed. This is the time I send a payment from Australia to someone in the UK, and it's how long I know that the funds are credited to the end customer account. And here you can see they'll have a lot of work to do across many of the regions. North America is the closest to hitting the 75% of transactions credited to the end customer account in 1 hour. But for most other regions, there is a fair bit of effort to be done to achieve the G20 target. Some of the challenges that really we need to focus on perhaps are market infrastructure, opening hours, regulatory requirements, local market practices that might require a customer payment to be checked with the end customer before it's credited to the end customer account, perhaps even batch processing in different countries. So here I want to just show some New Zealand data. And New Zealand data is at the very end, so look at the last 3 bars there. So you can see that in-flight speed for New Zealand, so bank-to-bank speed for New Zealand, is actually not quite as strong as the global average and the Asia-Pacific average. But on the flip side, your beneficiary bank processing speed and your end-to-end processing speed is much stronger than the global average and the APAC average. So there is probably some challenges here that are really related to operating hours. And so let's have a look at some data around when New Zealand received their payments in that kind of processing day. So interestingly, you can see in the middle is your 9 till 6, so your banking operating hours. And what you can see on the edges are obviously midnight to 6 a.m. on the left-hand side and 6 p.m. to midnight on the other side. So what's really interesting here is that you receive 50% thereabouts of your payments outside of operating hours. And this is really contributing to your end-to-end processing speed. And I talk a lot about payments and speed in Australia and New Zealand, and my Australian and New Zealand colleagues are always saying to me, we're disadvantaged in Australia and New Zealand because of the time zone, because of the challenges around, the US being open or closed when we're open or closed. And this actually validates that. And so this is kind of an area where if we can adjust our operating hours, that could be by banks opening their payment queues and crediting their own customer accounts overnight on the weekends, but also if our market infrastructures are open overnight and the weekend, we may also be able to increase that end-to-end processing speed. The other countries on the slide are anonymised, but I'm going to share with you because I think it's an interesting point that, The country at the bottom, country B, is actually the US. And most people would think that the US actually is at an advantage because it received most of its payments during its operating hours. What you can see here is actually the US received more payments outside of its operating hours than New Zealand does, but has a much faster end-to-end processing speed. And what does that tell you? It tells us that they have operating hours, different models in the US, particularly those big global banks, who run round-the-sun models, who credit their end customers and pass on payments 24/7. So their processing in their extended operating hours is really driving that end-to-end speed. Some of the factors improving speed and impacting speed here are on the slide. I've talked a lot about extending operating hours. Real-time payment systems, what that does is allow you to process payments on weekends and 24/7. And again, that increases your speed and your opportunity for a better customer experience. ISO 20022, which is really this interoperability of systems, whether it's an instant payment system, a high-value system, or an ACH or a low-value system, if they all talk to each other all around the world, you can pass data, you don't get truncation, and you have the same messaging standard, which makes it faster, better, and more seamless for processing, more efficient for banks, but also a better end customer experience. End-to-end tracking is also really important. It's something that customers really value. We all want to know where our Uber is, where our meal is, where our parcel is. Everyone wants to know where their payment is as well. Really at Swift, we want to drive some end-to-end tracking and interoperability across not only the Swift network, but those networks that are not supported by Swift as well. So a big focus for us over the next few years is interoperability and tracking across many different payment systems around the world. I'm quickly going to move into some payment friction slides, and there's only a few more. Here is some interesting data around volume. So New Zealand in the big number, APAC, and then global. So New Zealand grew by 21%. Cross-border payment volumes coming into New Zealand grew by 21% in 2023. So some great data there. On the other side, more than 10,000 payments were rejected and didn't receive the end customer account due to beneficiary account challenges. So it could be account numbers, account names, account closed. That's 10,000 customers who didn't receive their money, and 10,000 customers who didn't have a great customer experience. And then there's, after the fact, there's a whole heap of work that banks do around exception and investigation handling, and there are around 125,000 of those exception cases that need to be managed. And you can see the number increases, the bigger the region or around the globe, at a cost of efficiency and customer experience as well. In 2022, at the end, Swift did an independent review, research with some customers, and we really wanted to share what are your expectations when making a cross-border payment. And what this is telling us is that, banks prefer customers prefer their bank to make a cross-border payment based on security and trust, but they prefer a fintech based on speed, cost, and simplicity. The key point on this slide is that customers would come back to their bank if they provided the same service as those payment service providers. And really the message I want to leave you with here is it's about the customer expectation, and all of the payment service providers, banks, fintechs, other payments, it doesn't matter what organisation type you are, it's about meeting that customer experience. And these are really the key end user expectations: no deducts, transparency, simplicity, and traceability. I'm not going to spend too much time. I think I'm over. And so this is really about end-to-end tracking, some work to be done around continuing end-to-end tracking across New Zealand. and here's some reasons why payments are rejected. But to wrap up to say, from a vision perspective, what we really want is to uplift the end customer experience. We want to meet the G20 goals and targets, and what we want is to share a better end outcome for cross-border payments. So be transparent up front, pre-fill and validate your data, and really expose end-to-end tracking where you can. That was it.
We are over time, but I've got one rapid-fire question for you.
Okay.
There was a great slide there that showed a lot of payments do come in outside of normal operating hours.
Yes, sorry.
Can you give us an example of a market infrastructure
Yes.
that's looked to adjust their operating hours to try and improve the volume of payments that they can process in that time?
Sure. The CPMI did a research on RTGS, 82 RTGS systems around the world, and of those, average operating hours is around 11, but varies from market to market. 8 of those operate, on weekends, and of those 5 operate 24/7, 7 days a week, so not very many. But the Bank of England is actually doing a study and a discussion paper at the moment. It's actually a really good blueprint for how they're looking at extending their RTGS operating hours. And they really talk about the benefits to domestic payments, improving liquidity, reducing settlement risk. They talk about the improvement to cross-border payments directly linked to speed. And they also talk about the benefits to perhaps integrating with future innovations like CBDC. So really their focus will be extending operating hours for their RTGS system, and they'll do a formal consultation with their participants in 2025. It is a great paper, it's a great blueprint. They've had a look at, kind of done a simulation model about if they extended it, how they cross over with different regions, and how that might deliver some greater end benefits. So I recommend everyone having a look at that.
Thank you, Julie. Rapid fire panel, so thank you very much. And we'll move on to the second one. If everyone could thank Julie.
Thank you.
Okay, kicking straight into the second panel. Retail payments globally have undergone a significant change. Cash and card aren't always the only options anymore. More and more consumers have other options available, whether it be apps, wallets, QR codes, account to account, and even in some countries, digital cash is now a viable option for them. But let's not forget the retailer in this discussion as well. What should they offer as options, and what will suit their business and their customers? And what about Aotearoa? Cash isn't king, and the card probably retains that title in New Zealand still. What can we learn? But what this session is about, what can we learn overseas? What should this room, as the people who will deliver change into the future and change this payment system, be thinking about? So joining me on stage, I have Anna Palante from IKEA. Anna is New Zealand Customer Project Leader for IKEA in New Zealand. And prior to this, she led the global payments team for IKEA Retail within the Inca Group. She has over 10 years' experience within payments, specialising in merchant acquiring and retail payments experience. Welcome, Anna. Joe Rastrick, come on up. Joe, as Head of Pay Tech and Emerging Payments, Joe is focused on tech business that either have payments at the centre of their offering or offer services that have a strong payment component, including payments as a service, digital wallets, open banking, API-enabled businesses, Meta, Web3 payments, soft POS, blockchain, and more. Thank you, Joe. And Carolyn Young, last but not least. Carolyn leads Retail NZ, the peak industry body for retailers, representing 70% of the annual turnover in the retail industry. Retail NZ offers advice, resources, tools, and advocates on behalf of members. Welcome, team. So again, another rapid fire panel, so I think we'll dive straight into it. And Anna, I'll start with you down the end there. Would you like to just open by sharing your general observations on what's happening across Europe in the retail payment space, and how this compares to what you're seeing in New Zealand?
So I guess from a retailer's perspective, what we have seen is that there is a lot more payment options available for customers across Europe. And across Europe, I would say even individual markets have different local needs and local customer expectations that as a retailer we need to accommodate for. So taking the likes of examples like Germany, where they have more than 10 different types of payment methods, from account to account, invoice to pay, buy now, pay later, and cards and domestic schemes, from other markets like Spain, where you only have 2 or 3, which is still dominant by cash. It's quite a vast example of the different types of payment types that we need to be able to support customers with as a retailer. What we're also seeing is that a lot of the domestic schemes are also becoming a lot more available in the omni-channel experience. So it's not just about traditional ways of paying in terms of your in-store experience. It's also about the digital commerce. So how are customers wanting to pay when they're using mobile wallets? They expect to pay. They expect a payment method to be available across every single channel. And so this is also, I see, a challenge, because in a lot of different types of payment methods, we're seeing that it's very channel focused. So you might have wallets that will be based for just the digital experience, but what happens when it comes to the in-store experience? And as a retailer, we're exploring how do we bring this omni-channel experience into play, which means that the payment types become very crucial in terms of what we offer our customers and what they're expecting to be able to shop at IKEA.
Thank you, Anna. Joe, would you like to expand on this and share insights from across the APAC region?
Yeah, sure. And I won't dwell on it too much, because I think a lot of people have talked a lot about it this morning and put some fantastic points. But you know, we've got a myriad of solutions across APAC, right? We've got the super app emergence through China, Southeast Asia. We've got the UPI piece in India, which is phenomenal and fast becoming the way to pay across India. You know, and we've got Australia on their journey, I guess, of CDR and MPP and the changes there that they're looking to do. And then across the wider Pacific, I think you've got sort of a lot of different people looking at different solutions, but equally they're all looking for the same thing, which is how do they deal with this pain point? How do the retailers deal with the pain point of getting paid? And ultimately that swings back to they're looking to digital to either enrich or enhance on their existing offering. And here in New Zealand, you know, we've switched quickly to utilizing solutions such as, you know, contactless post-COVID, digital wearables, and then now we've got true account-to-account payments at point of sale live in the market, like the work that Centrepay and BNZ have done with PayApp. So it's exciting times ahead.
Thank you. And Carolyn, how does this align with feedback you hear from retailers?
Probably slightly different, just from the perspective that in New Zealand, obviously, we've got about 30,000 SMEs that operate in the retail space. And so you've got lots of really small retailers that are grappling with the ability to adapt and adjust to a quickly evolving marketplace where they are price takers, not price makers, and they feel that they have lost power and they haven't come on the journey of evolution of the technology changes in payments. And I think if I think a little bit about the conversations we've had this morning, where the word collaboration has come up a lot, and I think we talked about it in one of the briefings, Anna, that you don't see many retailers in the room, and obviously retailers are a big part of the payments network, and I think being able to bring retailers on that journey and for them to be able to feel that they fully understand where things are heading to, what options they've got, and what they can say yes and no to. There's a lot of pressure. The economy, as we know, is really difficult right now. It's really hard to make a dollar. There's lots of businesses closing every week. And so businesses are looking at every single cost that they have, and the payment space is a really challenging space because it's so complex and most retailers don't understand it. And so they're not sure that they're getting the best deal, and they're not sure that they've got any way to control the outcomes. And I think that's that tension around how do we evolve and provide world-class world-leading solutions and bring the retailers and merchants along the journey with us. And I don't think that's happening at the moment. So, if we take that collaboration piece that's been spoken about a lot this morning, how do we make sure that we bring some retailers into the room?
Thank you. And perhaps just back to you, Anna, just on that role that retailers should be playing in the conversation and the development and the progress. From an IKEA perspective, what would your expectations be?
Yeah, I think similar to what Carolyn was saying, I think as a retailer, we are essentially the voice of the customer. So we are designing for the customer experience, and therefore we're hearing firsthand exactly what those pain points are that customers have when it comes to making payments, or what are the gaps in terms of what we're not able to provide. And ultimately, we're also kind of in the, you could say, in the firing arm in terms of, do we offer every single payment type out there available for a customer, or do we become selective on being understanding of what those customer needs actually are based on how customers want to be able to pay in their local market and be able to support that. So I think we play a crucial role in that customer advocacy and bring that back into the payments community to kind of say, hey, actually what you're suggesting that customers are doing from a retailer perspective, how we actually implement that is not working the way that customers expect. So not only are we playing the role of actually implementing the solutions that are being developed, but we're also the ones that are supporting the education of consumers on how do they pay in this modern day, and also how do they pay in the different types of retail experiences that they encounter, because the payment experiences in IKEA is not the same as shopping at Amazon. It's not the same as shopping at your local food store. And I think that's also something that we have seen within even just the IKEA world. We have both a furniture retailing side of our business and we have a food business. And when you're buying food, you have quite a different expectation in terms of how you want to pay. It is not the same as wanting to buy furniture. So understanding that dynamic is important. And I think that's what we can bring into the ecosystem of that knowledge and the customer feedback that we get immediately.
Thanks, Anna. Joe, I'm going to throw a question to you. You touched on open banking just a few moments ago. So it remains a hot topic across the globe. Different approaches across different jurisdictions and different levels of maturity as well. So just can you start by sharing your observations, and again, what might we learn from others?
Yeah, I think we're truly fortunate. Well, we're fortunate in many ways to live in New Zealand, right? It's arguably the best country in the world to live in. But from a payments perspective, we're fortunate right now because we can learn from what has gone before, both good and bad, and implement that into the foundations of our solutions here that we're already implementing, right? So I think we need to create those strong foundations which are underway, which are fantastic, and from that develop up and out. If we look across to our Trans-Tasman partners, they've learned a few lessons along the way and they're having to implement some changes over there right now to... It really echoes the sentiment here of what both sides of me are saying, which is they haven't brought the customer along on the journey with them. And without that customer piece, how are you going to deliver? How are you going to bring it all to front of mind? If the customer's not there, then you're not going to get mass implementation, right? And that's truly what we need to figure out, is how we educate as we bring people along this journey of open banking with us. Brazil have done it exceptionally well. And that's because they brought the consumer along with them. 22 million customer accounts in the first 2 years consenting to that API is just astronomically great. If we can bring the customers, the consumers along the journey, and we can bring the retailers along with the journey, we will have a phenomenal outcome.
And Anna, Europe was pretty quick out of the blocks. What can you share about their open banking experience?
Yeah, I guess the key theme here is really understanding what the customer needs are in terms of that experience. I mean, if we look at the Nordics, for example, there is that digital identity. So customers expect that they can be able to make payments just by knowing their, your mobile bank ID, as an example. And that basically opens up a way for you to be able to pay, whether it's retailers, whether it's for your utility bill. So we can see that they've really identified that there is, where are the different use cases. I would say from a retailer perspective, there is some room for improvement and understanding what that use case is from a retailer's perspective. I think there's a huge opportunity when it comes to loyalty, for example, and being able to offer a more cohesive experience when it comes to loyalty programs for customers, because we do see that customers don't want to have multiple gift cards from several different retailers. They might want to have a central place where they can access that, but be able to access, discounts or offers from a variety of different places. So that's where we see, or we're still navigating what are the different use cases that we can use to offer a better customer experience. But it goes back to where does that customer experience, where do we need to meet that customer experience?
Carolyn, there's been a lot of talk so far about taking retailers along the journey as well as customers. Again, what would your request be of this audience in terms of starting that process?
I think to really embrace it. I think it's really critical that we understand the merchant experience, and that's both at the big end of the town and the small end of town, because we know that the majority of transactions, the volume is happening at the small end of town. Whilst we've got some really big players, they can often speak and they're often consulted with, and they get preferential benefits through those processes, often because of the size. But if we can't bring a lot of the small players along with some, a number of our members are disenfranchised around the payment system, and they feel very strongly about the current system, and they don't feel part of it. They feel that it's done to them. And I think to Anna's point, and to what Joe was also saying, that if we can devise a system that we understand deeply what a consumer needs and wants, and then we understand how that can be implemented and worked alongside merchants, then we can go on a journey of success. And I think at the moment we're pretty much battling each other, and I feel that we're at loggerheads, and we're not going to get the right outcomes that way.
Thank you. There's a question just flashed up from the audience, and it might be perhaps a good chance just to segue to that. The question is, would retailers prefer less payment options, BNPL, card, cash, etc., or for there to be many options that were just more simply understood? Views across? Carolyn looks like she wants to jump into this one.
Well, I think I would go off the back of what Anna was saying before, where, in different stores and in different parts of a store, you would expect to have a different experience in that payment system. So if you're in a supermarket or at a fuel station, at a big box retailer, you're expecting to have really sharp experiences at payment. If you're making a really large purchase, you're probably a little bit more relaxed, you've got a little bit more time, you can choose to make payment in a different way that may take less than a paywave transaction or a contactless transaction. So I think having choice is really good, but at the moment retailers feel that they have to offer everything, and they don't know why they're offering everything, and it's not necessarily productive because they don't understand all the different systems. And so I think if we could think a little bit more about horses for courses and empower retailers to feel confident about solutions they've got for their business rather than for every business, I think that would be my perspective from what I'm hearing.
And if I can add to that, I think it's also a little bit on, the customer behaviour and the customer need, right? So if the example that I gave is, a food purchase is different to buying a kitchen, for example. So I will, as a consumer, you have a different expectation in terms of what kind of payment offering I should have available, from whether it is buy now, pay later, or whether it's loans, or it is simply being able to use a credit card. So it's also understanding your customer base to pinpoint what is required. But I think what is interesting about the different types of payment options is when we think about the wallet-based payments or the wallet ecosystems, because that's where it actually adds you could say, a nice flair from a consumer perspective where it's all inclusive inside a wallet. So you've got the likes of Klarna where they're now embedding, banking as well as having financial services products behind it. So then from a retailer perspective, you basically have a one-to-one and the customer has a lot more options. So I think it varies on, again, the customer, it varies on the products that you're selling and the types of business you are. Yeah.
So moving on to a topic that's often discussed at payment conferences is omni-channel. And obviously it's a concept that's talked about mainly. It's that focus on the consumer-retailer interaction through the sales journey, but isn't always talked about from a payments perspective. So perhaps a question for the panel. What does omni-channel look like from a payments perspective? Are we looking for a consistent, seamless payment experience regardless of whether it's in the physical or digital world?
So I would say, I think, we're not unfamiliar with the fact that COVID kind of increased digital payments and digital experiences. So within IKEA, we've noticed that the shift in behavior means that we need to look at payments in a different context, because the payment options, if we look in Europe, a lot of it was focused on the online experience, the digital experience, and those options becoming available. But the problem is, once COVID kind of settled down and people started going back into the store, they wanted the same type of seamless, frictionless, secure payment options that were readily available online in the in-store environment. So that's where I think now we're really trying to look at how do we create that seamless payment experience across every single channel, and finding the right payment methods that facilitate all of those options. And I think that's a little bit of the challenge where we're not meeting customer expectations because it's only available in one area and not the other. So as a retailer, if you want to be able to create that seamless experience that customers expect, it's difficult to do that market by market if the offering isn't at scale.
I think if I echo that sentiment, like in that utopian state of payment, the payment does occur seamlessly behind the transaction. And that is, be it physical or digital, and any interruption can disrupt that intimacy. And I think it can take away from that emotional joy, right, delivered from the transaction. I know you don't have to talk about emotion when we're talking about payments, but, that's the whole point. We buy stuff and do stuff and get stuff, is the feeling from it and the need and the want and the joy. And if there's interruption in that transaction, then I guess it can detract and derail from that. So we do probably need to address things like surcharging to reach that utopia. And, in that omni-channel, if we want consistent user experience between emerging payments and traditional payments, the user experience needs to be seamless across both of those channels. We'll be led by the regulators on that as an industry, but it is probably a good thing that we do need to address.
Sorry, Carol and I are giggling up here because in the panel briefing we said we don't necessarily want to go down the surcharging rabbit hole, and a question's just popped up. What is the panel's view on card surcharging? So, at the risk of...
I have a quick chat.
Go on.
I have a quick chat. So firstly, I'd probably reiterate both of the points that Anna and Joe have made, and I think the key thing around a payment system is that we know that customer service drives sales. 70% of sales are driven by great customer service, and the customer service is from the moment you start engaging with a store, and these days it's usually online, to the moment you complete the purchase, whether that's in store or online. So having a seamless space that is really critical, and the joy at purchase and at payment, it shouldn't be, we don't want to see that that's diminished by a conversation around surcharging. And everyone in the room has had experiences of surcharging. I often use the example, my hairdresser has a 3% surcharge, which I've had conversations there, it hasn't changed anything, but we've all gone. I remember to your point about the joy of buying something. I was buying something new for my bike. I cycle, and as you know, it's not the cost of the bike, it's all the accessories you buy that costs the money. And I was purchasing this new item as a new pair of bike shoes, and I was super excited. The guy at the till goes, "Don't pay by PayWave." This is exact words, it's not our fault, there's a surcharge here. What we can say is that the retail payment system is the most contentious space amongst our members. We have had very high engagement with our members around a survey that we did, around a workshop we've done, around some consultations that we've done in that space. We ran our own survey and the data tells us that 24.7% of our members surcharge. And let's round it to round figures, so 25% do and 75% don't. And they are absolutely entrenched in their own spaces. So when the follow-up questions are, if the total merchant service fee was reduced to 1% or less, would you still charge a surcharge? And the answer is absolutely yes. And for the 75% of retailers that don't charge the surcharge, they actually are really more concerned about the customer service and customer experience. Whilst they don't like the fees and they don't like the system, they are really trying to stay in that space. So, yeah, it's a really fraught area. Do you guys want to have a crack at it?
No.
We'll move quickly on, but thank you for dancing around that topic. So just for each of you, in terms of developing the retail payment system here in Aotearoa, where should our priorities lie? And Carolyn, I might start with you on this one.
Look, I think the theme for the conference and the thread that's run through the morning sessions around collaboration, it was used a lot by Dr. Small, I think, and a number of other people. How can we work together and what is it going to take to change the talk to action, and how do we bring people on that journey? We've heard from a number of people today about the fact that we obviously were world leading, 40 years ago or close to it, and we're not now. So how do we get back to that space, take those learnings from other countries, but bring consumers and merchants on the journey with us so that we can have success?
Anna, priorities?
Yeah, I can only echo a little bit on getting the right stakeholders in the room, I think. I think, I was kind of inspired a little bit what Dom said, fintechs and banks, it's not banking anymore, it's fintechs, but also in payments, it's not just fintechs and banks, it's also merchants, it's also the end-to-end user, it's a whole ecosystem where everybody needs to kind of get involved to be able to get that customer adoption, to be able to understand how it works, and there's a lot of education that needs to happen for everyone to know what's happening in the payment space and how it actually works. And I think, you can't go to school and learn payments. That's not that's not something that has a curriculum. So it's only people in the payment space that really spends their time, years and decades to learn about it, to kind of navigate the space. But that's not the norm for everybody. So I think getting everyone as part of that supply chain in terms of working with payments all the way from, just a customer to your accounts person is important, because the feed is wider than just the transaction itself.
Joe,
Yeah,
final word from yourself?
Oh, cheers. I think our priorities should be inclusion and inclusivity, right? And that needs to be then a transaction for consumers. So make them enjoy the checkout experience through personalised rewards and loyalty, make them feel loved, basically. And for the merchant, we should be offering, solutioning that they can understand mostly, and equally that they can personalise for their customers.
And a great note to finish with. So thank you very much to the panel, Carolyn, Joe and Anna. If you could please thank them as well.